For viewers who are new to Connecting Excellence, how do you describe the business in simple terms?
We're an international executive recruitment company placing mid, senior and executive level candidates around the world in a number of different industries. That is a platform for growth and a sector agnostic and regionally agnostic platform for growth. But we are backed by a 4-year Bitcoin balance sheet strategy, and as a public business, we intend to combine both sides of the business, the Bitcoin Treasury side and the operating business, to deliver growth for shareholders and compound value over the long term.
Spencer Riley is the core recruitment brand. What kind of roles and clients do you focus on, and where are you seeing the strongest demand?
Types of roles and clients we focus on with Spencer Riley would be small, medium, large, private and public businesses across a number of different sectors. So professional services, business advisory, logistics, construction and engineering, life sciences and facilities services as well. Now, the types of clients, people will recognise PwC, Deloitte, Ernst & Young, might recognise BRG, BDO, UPS Logistics. So we work with people across quite a sizable and different demographic from a client base. Candidates we place will be mid, senior and exec level. Examples would be US sales director for a AI intelligence software firm recently, US managing director for one of the large consulting firms, and then a UK managing director for a large integrated services provider. So quite a number of different industries.
At its heart, is this already a proven scalable recruitment business, or are you still in build-out mode?
So it's a proven, scalable executive recruitment business. We are sector agnostic in that if we bring people in to scale the business, they can work in the industry that they are experts in already, and in the region that they're experts in already, whether that's the USA, Europe, UK. So there's no limit to the scaling of the business. I suppose the advantage of scaling the business now is the public status and the Bitcoin balance sheet strategy, allowing us to attract the talent to really scale and build on that platform that we've developed.
Recruitment and Bitcoin aren't an obvious pairing. Why bring a Bitcoin treasury strategy into this business at all?
First brought the Bitcoin balance sheet into the business in 2021. So as a private business, we've maintained a disciplined Bitcoin buying strategy. That's allowed us to move into the IPO phase at the end of last year and go into a public status. And the reason we wanted to do that, first time we've developed the strategy, was to strengthen the balance sheet for the long term and to be able to take advantage of opportunities as a private company. As a public company, it allows us to use performance-based equity to attract talent and both companies to the group.
How does holding Bitcoin on the balance sheet actually improve incentives, performance and retention inside the company?
So the incentive to join the business would be we offer similar basic salaries, similar commission schemes to our competitors. And in our industry, it tends to be modest basic salaries and the opportunity to earn high earnings based on performance. That performance is measured by revenue and profit, generally speaking. So having a Bitcoin balance sheet, public status, allows us to put in performance-based share options to attract people into the business. That also allows us to motivate staff and give them the additional benefit of benefiting from the operating business and also seeing the benefit of the growth of our balance sheet based on the asset that we hold as well. And that, I suppose, driving the retention side of it just makes it a place where you can come in and build a career over 5, 10, 15, 20 years and know that you're locking in the value that you're delivering on behalf of the company when you're in either a recruitment consultant, managerial or director level position as you build through your career.
What makes AQSE different from other Bitcoin treasury companies?
I think we've got a 4-year history of buying Bitcoin as the Bitcoin price drew down from 2021 to 2025, and our revenues increased more than 30% compound annual growth rate throughout that 4-year period. So we're a tried and tested model as a private business, and as a CEO and founder of a business, the reason we have the strength in the board that we've built and the key strategic investors that we've built is because they've seen that proof of concept over 4 years and they understand the platform that we're looking to develop and grow the business into the future with. So I suppose the difference would be we're an operating business with a proven track record of operational growth, and now we're using both the operational growth and the Bitcoin balance sheet to combine a strategy to benefit both sides of the business, operating and balance sheet.
You often talk about Bitcoin per share. Why should investors pay attention to that metric?
So investors will be looking at the operating business as one aspect of the investment that they're making. Now, the more profit we're making in the operating business, the more Bitcoin we can buy organically. But we're also raising our Bitcoin per share through innovative financial strategies as well, working alongside the board and the key strategic investors. Now, what we're measuring there is how much exposure an investor has to the underlying asset with the measure of Bitcoin per share. And our focus is to continually increase the Bitcoin per share measure over the long term.
Since IPO, you've continued to build your Bitcoin treasury. What's your framework for buying and how disciplined is that process?
We believe in the value of Bitcoin over the long term. So over the next 4, 8, 12 years, we are anticipating, and the industry is anticipating, based on ETF buying, based on nation state discussions, and based on corporate adoption, a 30% compound annual growth rate over the next decade. So from a buying perspective, we are buying when we have the opportunity to buy, and we're holding long term to benefit over the long term. So we're not looking at short term price movements, we're looking out over 4, 8, 12, 16 years. And from a buying process, we've partnered with Cartwright's Treasury Advisory, who are part of Cartwright Pension Trust. Now, they're the first business to advise on a pension fund allocation to Bitcoin in the UK. So we wanted to partner with them to put in place really robust governance and policies and ensure that the due diligence of the exchanges and custodians was at the highest standard to allow the business to set a platform to grow into the future and be attractive and understood as well by institutional investors.
How do you make sure that operating a business keeps generating cash while you're also compounding Bitcoin on the balance sheet?
Day to day, the operating business, the experienced executive recruitment consultants, high performing individuals in the operating business are focused on their clients and candidates. And for a number of them, they will not have day-to-day responsibility or interest in the balance sheet side of a business. So they're incentivized and motivated to generate senior level placements, which generates revenue, cash flows, profit for the operating business. And in terms of making sure that that continues into the future, we're having conversations with individuals to join the group, and not just individuals, but we're also putting in place the conversations that we need to have now with businesses who've seen the model, are interested in the model and may want to join the group in the future.
Your Bitcoin denominated convertible bond is a big step. What problem were you trying to solve when you designed it?
So what we wanted to solve was, in Bitcoin treasury companies, historically, you've seen periods of high multiples of NAVs and low multiples of NAVs. Now, in a high MNAV environment, we have the tools in place to accrete value to shareholders and increase Bitcoin per share. In a lower MNAV environment, we have tools like the convertible bonds that we're designing to be able to benefit the shareholders and benefit the balance sheet. And the problem that we've solved with that is there are institutions around the world holding significant amounts of Bitcoin. You have one of our key strategic investors involved in the NASDAQ listing that's holding 35,000 Bitcoin. You have hedge funds in Switzerland with one of our board advisors, Richard Byworth, that's holding 5,000 Bitcoin. But there are many institutions around the world holding this asset now. What we wanted to provide them was a limited downside risk for them. So there's a 2% fee for our convertible bonds, which means over the 12-month maturity, the downside for them is 2%. We're selling them at a premium, but the upside for them, when our share price outperforms Bitcoin, is high. So they're bonds that appeal to institutional investors holding the core asset of Bitcoin and wanting to use that into the future. And the solution for us is it allows us to demonstrate and show where we will be from a balance sheet perspective, provided that our share price hits the level of 120% outperformance on the conversion price. Then we know we can move that Bitcoin from being held encumbered onto the balance sheet unencumbered by repaying those bonds with shares.
In plain English, how does the Bitcoin price adjustment work, and why is it fair to both shareholders and bond investors?
In plain English, the Bitcoin price adjustment, or the Bitcoin differentiator on the XCE Bitcoin bonds, allows the bonds to track the Bitcoin price. So for investors, they know that they are measuring the return based in Bitcoin terms. So if the Bitcoin price is here and the share price is here, then we're selling them at a 30% premium. And let's say the Bitcoin price, so premium's there. Let's say the Bitcoin price moves up, the conversion price rises as well. And if the Bitcoin price moves down, the conversion price comes down as well. So it's the environment where our shares outperform Bitcoin that they can be converted early. So in simple terms, if you're an investor in those bonds, you're not going to have an environment where you're asked to convert and our share price hasn't outperformed the underlying asset, Bitcoin.
Why was it important to denominate the bond in Bitcoin rather than pounds, and who do you expect to be most attracted to it?
Two reasons it's important. One, it allows us to actually accept Bitcoin from the institutional investors rather than give the business an area of, it limits risk. So if we're receiving it in pounds or US dollars and then buying the Bitcoin, there's a risk between that. So it allows us to accept the underlying asset of Bitcoin, and it allows the investor to know that by doing that, if they're buying a bond for 10 Bitcoin, or let's say if they're buying a bond for 100 Bitcoin, over 12 months they know if the upside is hit and the conversion happens, then they've got the benefit. But if it doesn't, we get to the end of that 12-month period, that the same Bitcoin would be returned to them.
What does having someone like Adam back involved say about how XCE is being viewed within the Bitcoin community?
Well, Adam Back's one of the most prominent Bitcoin Treasury or Bitcoin company investors in the space. He was named in the original white paper for Bitcoin, and he was credited with designing the proof of work mechanism that backs the network. Now, Adam's preparing for a NASDAQ listing with a SPAC called BSTR that's holding 35,000 Bitcoin. So he's a very serious investor, and I think when you look at our board, we have a strong board as well that send the signal to both the Bitcoin community and institutional investors who are learning about the asset, interested in the asset, that we have that 4-year history and proof of work that has meant that I've built a network up over that time that trusts me to deliver. And also, from Adam's perspective, he looked at this as one of the first opportunities for a traditional business to grow as a result of a Bitcoin balance sheet. There are other people on the board, like Richard Byworth's a pioneer in Bitcoin, first Bitcoin denominated hedge fund in Switzerland, holding 5,000 Bitcoin. You've got Sam Roberts as a non-exec chairman from Cartwright, who advised the first British pension fund allocation to Bitcoin. And you have Vijay Selvam, who is ex-Goldman Sachs head of governance, but is also reporting into two of the world's most famous Bitcoiners and a NASDAQ-listed digital assets exchange. So we've built a very strong team, and we have a very strong network as well.
How does your company structure give you the flexibility to do acquisitions without heavy cash outlay and still create value for shareholders?
Similar to how it allows us to attract high revenue generating talent to the operating business, in that we can bring companies into the group, efficiencies of scale, but also allow them to, the problem it solves is executive recruitment companies that are privately owned very rarely do competitors acquire competitors, and very rarely do mergers happen in the industry, and very rarely do private equity companies come in and buy businesses and have a successful 5, 8, 10-year outlook. The solution we provide to companies and business owners in our space is that they can join the group and we can do a 3, 5, 7, 10-year equity-based earnout that limits the cash spend for the business and means that they have to provide A, their cash reserves at the start, but B, ongoing EBITDA, cash flow, profit into the topco business in order to earn performance-based equity linked to the success of their business over that period of time.
You're also building a Bitcoin-focused executive recruitment division. What demand are you seeing from Bitcoin companies and from traditional firms?
There's a huge opportunity in the Bitcoin space for executive level recruitment. So we've been approached and we've signed a deal with a Bitcoin investment fund looking for chief investment officer, looking for vice presidents of client relationships, and those processes are ongoing now. We're in talks with a number of different innovative firms and also businesses that you would consider traditional in Bitcoin. So we can provide services for the Bitcoin mining businesses looking for CFO level talent. We can provide services for those startup innovative businesses within the large venture capital players in this space who are looking for full boards and senior level executive appointments to prepare the business for fast-paced growth and solidify the team for the future. But what we're seeing there now, where it's very Bitcoin focused, may change over the next 5 to 10 years, as I believe you will start seeing traditional businesses like ourselves and more traditional investment companies looking at the asset and wanting to ensure that they make senior level appointments who have an experience of the asset, an understanding of the asset, and can strategically guide their businesses into using the asset as a corporate reserve asset or a corporate medium of exchange or collateral in the future. And that covers a number of different industries. You think about banking and you think about insurance and you think about traditional investment funds. They're all going to need that expertise over the next 5, 10, 15 years. So we want to build a platform where those in traditional roles who have a passion for the asset can look to move into the space, and also for those businesses looking for talent who understand the asset to find credible, experienced and verified talent to join traditional companies as well. That's into the long term.
Over the next year, what should investors be watching most closely, and how do you ultimately want the markets to think about valuing XCE?
I want the markets to value XCE as a combination of a growing operating business and a Bitcoin balance sheet with a Treasury strategy. So on the Bitcoin balance sheet side of the business, it's Bitcoin yield. We're currently at 345%. We've moved the Bitcoin held from 9.27 to 41.35 Bitcoin held. And an important measure for investors is the average purchase price in which we've paid. We have quite a low average purchase price right now at $80,000. So that's what they'll look at on the Bitcoin side. And on the operating side, they'll be looking at our revenues, our profits, our cash flows. But importantly, and I suppose in the detail, it's who are we hiring, the background of the people that we're hiring, and the markets in which we are developing within that business, because it's sector agnostic and scalable. So if we're hiring people from an investment banking background, that might be interesting to some investors. But we're going to be really clear with our communication to the marketplace and updates on the progress as we go.